Good morning, traders. Welcome to the weekly Elliott Wave Street report. I'm Juan Maldonado, and it's a pleasure to start the week showing some of our wave counts. You can get the whole analysis on elliottwavestreet.com/membership. We have stocks, we have futures, and we have forex. Let's start this week with the euro after last week, where we have the inflation report higher than expected, and that shake out the markets heavily. So in this report, I'm going to talk about the reaction of the market after the inflation, and what's going to be the next step, and what's going to be the trading plan for this week. So on the euro, we were seeing the price already rejecting this area. That one was really interesting because we start seeing the price showing some buyers. And I was looking last week for something like this during this corrective wave in order to go long on the euro and have a nice trade to the 117, 118 maybe, right? That was my plan. But the price after the inflation moved lower, withdrawing the liquidity and breaking support. And this is why it's so important to wait for a setup, because I was going long if only if I have my setup here. So I didn't went long on the euro because the price accelerate back to the low and continue without any participation of the big guys. Clearly, when they started to show up, it was here for some profit taking, and from there some small candles. After that, we start seeing some tiny candles. After that, small candles, after this big move down. So this is creating a new market cycle on the euro, where when we have a strong move, it could be up, it could be down, it doesn't matter, in this case down, we need to wait for a 3-wave sequence to see some buyers. And then we need to have another leg down to have the completion of the cycle. And from here is where we can start buying. So with this addition of a price to the downside, now we need to look for that 3-wave sequence, or maybe this is it, but I would prefer something bigger. And here actually could be a short trade for a day trade. And once the price retests this area, we can very easily on the euro now go to the 114 area. That will be good. And once we are here, if we start seeing some demand, that's where we can jump into this trade. Right? So with this new part of the puzzle that we didn't have before, and now we have it, it's time to get ready for the next move. Right? So that's going to be the plan on the euro this week. Let's have a look now at the pound, because I have a nice trading plan for this week. On the pound, something similar happened, but on the 4-hour chart, we already have that leg. Look, we have the leg down, we have the retrace, and we are having the new leg, and we are having the validation. We're having here the validation that the demand is coming back to the market. And that's a big difference between the pound and the euro. We don't have this demand coming back on the euro yet. That's why we need to see the price going sideways, making a lower low, having a new reference point. But on the pound, we are seeing that reference point. So now that we have validation, we don't want to go long at this price would be too expensive. So actually we need to look for a discount. Let's go to the lower time frames like the hourly chart, and here comes the trading plan. I need to have a leg down this week on the pound. And once we have some signs, looking to the left, I like this level. Or we can extend the tail, the tail for this last swing. And at this area, just with any small demand setup, I'm going long. So let's say that we are here and price eventually shows a green candle, bullish engulfing candle, for example, on the hourly chart. That will be enough, because most of the times it's not about the candle, it's about where the candle is showing up. Location is so important, because if I have a engulfing candle, I don't know, anywhere in the price, doesn't tell anything. This engulfing candle here, this green candle, it's not telling anything. It's just a candle. But when I have a pattern inside the area where I'm looking the price to reverse, that's the signal, right? So the stop loss will be a little bit lower than the previous low, and from there the plan this week is to capture wave 3. Let's have a look at the fantastic S&P. We are seeing a lot of a bullish movement at the beginning of the week. Last week, we were seeing this strong move down on the S&P. And why the S&P reverse? Well, we have a surprise inflation report last week. And when that happened, some investors started to sell their positions, maybe saying, oh my God, the Fed is going to increase the interest rate to stop inflation. If they increase the interest rate, the market is going to collapse. This is the end of the world. This is the end of everything. Oh, this is it, right? So a lot of people were thinking like that, and that caused this strong move down on the S&P. But at the same time, well, some were in complete panic. The big guys were buying until no more sellers were left here. Like the institutions were absorbing all these orders, and that caused this leg up. So I think that this number, in the index 4631, is just a random number. The price, I can finish there, or it can finish higher, or it can finish lower. Because it finished, not because they were saying, oh, that's the support or resistance, all resistance or support, whatever, that we were looking to buy. So precisely there it bounces. No, it doesn't work like that, This is just a random number where the institutions were buying before, and eventually that's it. But it could be there, or it could be lower if they have more sellers, right? So these trades are really difficult to find at the bottom of the market because we don't have any reference point to work with. Once we have the price coming up, here we have something interesting, however, a little bit complex, but here comes the safest trade, because we have now a 5-wave sequence. So with that 5-wave sequence, we need to look for the discount, and once the wave 2 is done, we can go long. So it's easier trading here than trading here. Here will be a trade if price continue lower and then it bounces, that will be the buy trade. But when we have V-type reversals, it's a nightmare to trigger those trades. And finally, let's have a look at oil, because I'm looking for a retrace to sell it, right? So the trading plan is going to be pretty simple on oil. We are seeing an ending diagonal. Here, oil is likely to start reversing from the lows. And I'm calling this entire market cycle wave 1. After wave 1, wave 2 is going to show up Ideally, something like this. And once wave 2 shows signals that it's done, I'm gonna go short. That is why it's so important that you sign up for the Elliott Wave Street membership, so you can get the daily updates and the daily plans. Right, so the plan will be to sell after the wave 2 to start following the leg down. Alright traders, so that's the plan for this week. Please visit us on elliottwavestreet.com/membership, where you are going to find all the membership plans that we have. We have the Forex, the stocks, or the full access. So here you can pick your plan. We have trials for $19 per month. And here we have currencies, stocks, and the futures. Or if you want the full access, here on the right, you will get access to everything. Thank you very much for your time. Have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.